You're listening to international investment advisor Doug Goldstein on the Goldstein On Gelt Show, the financial show where we'll talk about how you can make the most of your money. With all the confusing financial chatter bombarding you each and every day, Goldstein On Gelt will give you the practical information you want and need about living a financially stable life. Here's your host, money maven Doug Goldstein.
Okay, we are back. I'm very happy to have on the Goldstein on Gelt show as a regular guest, Ron Zalben. Now, of course, you know Ron because he does the weekly tax tip on the Goldstein on Gelt show. And also I've spoken about him because he is one of the contributors to the new book, The Expatriate's Guide to Handling Money and Taxes, which, as the name suggests, is designed for expatriates. Ron, a pleasure to have you.
Pleasure to be here, Doug. It's a pleasure to be here live with the audience.
So let's talk about U.S. expatriates, because that's what we're writing about in the book. Do all U.S. expatriates have to report to the American tax authorities?
In general, yes. Expatriates, which includes U.S. citizens and U.S. residents, which are better known as green card holders, have to report to the United States government, to the IRS.
And what exactly do they have to report?
They have to report their worldwide income. Now, people who live in the United States also have to report their worldwide income, but someone who leaves the United States who is a U.S. citizen or a green card holder has to continue to report their worldwide income.
This is kind of unusual because most of the time if someone leaves a country, he's done with it.
Absolutely.
But the U.S. decided to kind of track people down and make them pay forever?
That's correct. That's one of the privileges that you get with your United States passport.
Mm-hmm. Is there a deadline? Is there, in fact, a statute of limitations after 3 or 5 or 10 years you're done, or is it really forever?
Well, once you're a U.S. citizen, you have to keep reporting forever. Yeah, absolutely.
Okay, so a lot of people, for example, that you deal with, they've left the United States, they live in Israel, and they get a job in Israel. Are they required on their salary that they're already paying tax in Israel to also pay tax on that to the U.S.?
Yes, they are. Now, usually I hear a gasp when I say something like that to a client.
Here's my gasp.
Exactly. But in general, they have two different options when they have salary from a foreign country. One, they'll get a foreign tax credit for the taxes, for example, that they pay in Israel. Or two, they can take a foreign earned income exclusion where basically they put their salary in the return and they take it out again. And each year there's an exemption amount. Right now it's about $95,000 where they can put the salary in and take it out again, and they won't pay tax on the salary.
And what about people who earn more than that?
They'll get a tax credit for the amount that's over the, let's say, $95,000.
So if a person, let's say, earns $200,000 living outside the United States, in fact, living in Israel, and he pays tax to Israel, what's the difference between the first $95,000 and the second $105,000?
Well, let's take an example where I have somebody that makes, let's say, $200,000, and he has absolutely no other income. He could take a foreign tax credit where he basically puts in his $200,000 of income, and then he'll get a credit for the Israeli taxes paid, and he'll end up owing nothing. Now, then the second example where he takes the foreign earned income exclusion on the amount that's over the $95,000, he'll get a foreign tax credit, and it'll result that he'll pay no additional tax either way. Now, where someone has interest, dividends, capital gains, rental income, that's where things get more interesting, and you have to go between the two methods to see which is more advantageous.
So it's possible that someone who has those sorts of investment income could end up, in fact, being double taxed?
No, they won't be double taxed. They'll get, let's say I have somebody that's a resident of Israel, and they have, let's say they have interest from a bank account. For the 20% tax or the 15% tax they pay in Israel, they'll get a credit for that on their United States tax return. Now, if they're in a bracket above, let's say they're in the 35% bracket in America, and they only paid 15% tax to Israel, they'll have to make up the difference on their American tax return for the 20%.
Huh, that's interesting because people often think that the Israeli government takes more in taxes, but you're giving an example where the IRS would take more, and then people would actually have to pay the difference back to the U.S.
In general, on income that's at ordinary income tax rates, in general, income from Israel will be taxed at a higher rate because Israel's highest tax rate is 48%, and the brackets in Israel tend to be very narrow, and you tend to get up to the higher tax rates very quickly. But if something's at a flat rate, for example, on interest or dividends or capital gains in Israel, it's possible that there will be a differential.
What about on real estate? I know that the Israeli tax authority is a little more sympathetic to someone earning rental income. He buys an apartment and rents it out to someone, and he doesn't necessarily pay tax to a certain amount. How does that work? Then does he pay tax to America?
So for real estate income in Israel, for example, in tax year 2012, if somebody had under 4,910 shekels of rental income a month, that amount was totally exempt. Let's say he had 3,000 shekels of rental income a month, so that would be 36,000 shekels. It's under the exemption. They won't pay any Israeli tax, but on their American tax return, they're going to have to pay tax on that amount. Now, there's situations where people have over, let's say they have 6,000 shekels a month of rental income, and they have an option where they can pay a 10% income tax. So, for example, for 72,000 shekels of rental income, they can pay 7,200 shekels of tax to Israel, and they'll get a credit for that 7,200 shekels of Israeli income tax on their American tax return.
I see. So it is possible, if they go through for the model where they are paying tax to Israel, that then they would not pay the tax to the U.S. But a lot of times, I see this in my day job. I'm a financial advisor, and a lot of times people say, well, I'll just buy an apartment and then rent it out, and I don't have to pay any tax on the rent. But really, if they're Americans, they might be subject. That's very interesting.
That's correct.
We're talking to Ron Zalben, who you, I hope, know as a weekly contributor to the Goldstein on Gelt show with his weekly tax tip. He's a senior partner at Don Shrensky and Company, a Jerusalem-based accounting firm which deals actually with a lot of international tax issues. In fact, Ron is a contributor to the book that I've been mentioning quite a bit, The Expatriate's Guide to Money and Taxes, which you should certainly check out at www.expatguidetomoney.com. Ron, let's talk about the case where someone has U.S. citizenship but doesn't really feel like a U.S. citizen. Now, you said before that if someone has a green card or is a U.S. citizen, then he's falls into the U.S. tax net. But what about these people who were born in Israel, whose parents maybe moved here or grandparents moved here, and just by technicality they have U.S. citizenship? How does it work for them?
They're liable to U.S. tax just like anyone else, like you and myself who immigrated from the United States to Israel. They're subject to U.S. taxation just like anyone else. For example, a couple days ago, we had in our office an 80-year-old woman. Her parents came to Israel in the 1930s. She was born to an American parent, and she's a U.S. citizen. Mm-hmm. Now, because of FATCA, the banks in Israel and everywhere else in the world have to ask their customers if they're U.S. citizens. And this person told the bank she was a U.S. citizen, and now they want her to fill out a W-9 form.
And therefore start to pay tax on her income to the U.S.
Well, the bank has to report her Social Security number and her name and certain other information to the IRS. And she's basically her information is now going to be given over to the IRS, where previously the banks never shared that information with the IRS.
That's interesting. Actually, I had a similar experience myself personally. Normally I deal with it professionally. I actually get a lot of clients from people call my office and they say, hey, Doug, I was just kicked out of my U.S. bank or brokerage firm because I have an Israeli address, or they say, I was in my Israeli bank and they told me that I can no longer do my securities trading through them, and so therefore they want us to handle the account. But personally it happened. I went to open a bank account, which I have not done in many, many years, and they asked me if I'm a U.S. citizen, and I had to, and the answer obviously was yes, and I showed them. And then they said, okay, we'll call you. We first have to get your account approved before we can go ahead to the next step because you're a U.S. citizen. I thought this was amazing. All right, so
absolutely.
let's go back over reporting.
Mm-hmm.
Are there different levels that could make a person's obligation to report to the United States? Different levels of income? Does that come into play?
Yeah, absolutely. For 2011, the tax year, if you were single and under 65, if you had over $9,500 of income from any source anywhere in the world, you were liable for a tax return. If you were married filing jointly and both spouses are U.S. citizens or green card holders, the threshold was $19,000. There's different thresholds if you're married filing separately or if you're head of household. So again, that's your worldwide income.
Is there an easy way for people to find this out, to kind of see if they should be paying or reporting?
Yes, they should go to the 1040 instructions, and there's a chart, I believe, on page 4 or 5 that explains what the filing thresholds are.
So the fact is, there are probably a lot of people who, let's just say, not out of malice, but just out of a mistake, don't file. What sort of penalties are they subject to?
Well, if they owe tax, there's a number of penalties that they could incur. First is failure to file, and that is 5% for each month up to a maximum of 25%.
5% of the amount they owe?
Yes, that's correct.
Okay. Wow. That's a lot of money. If you don't even realize for years, that could be
also, there's interest on that.
Oh, man.
Also, there's an underpayment penalty that you could be subject to. There's quite a few penalties. There's another form that taxpayers have to file. It's called an FBAR form. And for that form, you have to report your financial accounts. And that includes your bank accounts, your security accounts, your employee benefit accounts, such as Kupat Gimel, Karen Hishtalmut, Karen Pensia, and Bituach Minalim.
Wow. And if they don't report that, what are the penalties there?
The penalty could be $10,000 per year.
Oh, man.
Or $100,000 or 50% of the account balance. So it's pretty substantial.
I think that's on the chart, the checklist that you included in the Expatriate's Guide to Handling Money and Taxes. Did I mention that before, that Ron is a contributor to the book that everyone should look up at expatguidetomoney.com. You know, Ron, I'm seeing that we're running out of time here. So let me ask in the last few seconds, could you just tell people how can they follow you and follow your work and see what's going on in your world of taxes?
Sure. Our firm's website is dscpa-israel.com, or you can email me at ron@dscpa-israel.com.
Okay. Ron Zalben from Don Trenskin Company, thanks so much for joining us for a much longer discussion, and we always enjoy your tax tips right here on the Goldstein on Gelt Show.
It's been a pleasure, Doug.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Doug's weekly radio show is heard around the world, but if you miss it, you can download the podcast at www.goldsteinongelt.com. The Goldstein on Gelt Show gives you up-to-date financial ideas so you can get on the path to financial freedom. If you'd like your questions answered on the air or off, send Doug an email to doug@profile-financial.com. It's your money for your future, so join Doug every week to build your wealth on the Goldstein on Gelt Show.